Paying a single dollar more to the IRS than you legally owe is an unnecessary destruction of your personal wealth. In the next 6 minutes, we are going to build your personalized, step-by-step 2026 tax optimization action plan to help you save thousands. To get started, I need you to grab 2 things right now: a recent pay stub and a blank piece of paper or a digital note. Title that document My 2026 Tax Plan. Overpaying the IRS is not a legal obligation. It is simply a failure to plan ahead. Look at the document you just created. At the very top, write down Step 1, Retirement and Health. Now look at that pay stub. Confirm that you are actively contributing to an employer 401k. If you are self-employed or your job doesn't offer a retirement plan, write down the phrase Open an IRA instead. If you have a qualified high-deductible health plan, you have access to a health savings account. Add Fund HSA to your list. There is a strict rule to follow here. You must use these HSA funds exclusively for qualified medical expenses to maintain their tax-free status. Fully funding these pre-tax accounts forms the foundational shield of your tax strategy. It legally keeps your gross income out of the government's immediate reach. Let's move to the second phase. On your document, write down Step 2, Target Tax Credits. This shows how a standard deduction works. It shrinks the total pool of taxable income before the math is applied, leaving the tax bill unchanged for now. A tax credit works differently. It acts as a direct dollar-for-dollar eraser against the final tax bill. Write down these 3 specific 2026 credits to research: the Child Tax Credit, the American Opportunity Tax Credit, and energy efficiency credits for home improvements. Because credits erase the final bill rather than just shrinking the initial income math, prioritizing them yields the highest mathematical return on your time. On your action plan, add Step 3, Systematize Records. Look at this banking interface. If you're a freelancer or business owner, you must open a dedicated business bank account. Stop commingling your funds. Right after this video, create a dedicated digital folder for 2026. Use it to store all of your receipts, software invoices, and internet bills. Clean, isolated financial systems eliminate the panic of tax season, ensuring that no legitimate deduction is missed because of messy records. Now we address end-of-year wealth management. If you have taxable investments, add Step 4, Q4 Portfolio Review to your document. This illustrates tax loss harvesting. You sell an asset with a red loss to offset taxes from one with a green gain. Mechanically, the realized loss neutralizes the gain. Schedule an alert for November. This strategy is invalid in January. Strategic portfolio trimming before New Year's Eve turns unavoidable market losses into a guaranteed tax shield. Write down the final requirement on your plan. Step 5. Consult Tax Pro or IRS rules. Tax regulations are volatile and change from year to year. What worked in the past may not apply in 2026. Even the most robust optimization framework must be cross-referenced with the latest IRS guidelines to ensure total legal compliance before you make major financial moves. Look down at the document you just created. You have successfully transitioned from vague savings ideas to a concrete step-by-step directive covering your accounts, credits, banking, and investments. If you found this actionable, consider subscribing for more tutorials on U.S. personal finance, investing, and smart money strategies. True tax optimization is a proactive, documented process. It is a plan you execute year-round, not a reactive surprise in April.